Time now for the Executive Edge and a look at CEO compensation. Leslie Picker joins us now with the details. It was a tough year, but that's the old expression. The worst pay was great for these guys, probably, right? The worst one was still pretty good.
Yeah, it wasn't a tough year for everybody, Joe. Despite a year filled with layoffs, dividend cuts, and rampant uncertainty, CEO pay held, well, relatively steady. Equilar, a compensation data provider, is out with a new report. It shows that the median compensation for the top 100 companies by revenue was $15.5 million last year, a small decline from 2019 numbers, but when looking at the average compensation, that was actually about 3% higher year over year. Looking below the surface, though, it's clear that those sectors that saw more of a tailwind from the pandemic, well, their CEOs were the ones who really benefited. CEOs of tech companies, for example, enjoyed a median of 16% more compensation, for example, and those in the communication services and consumer cyclical sectors were up 14 and 12% respectively. The opposite, of course, was true for companies that didn't do as well during the pandemic, with steep declines among energy CEO compensation and those in the financial services sector. Now, the report is an early peek at trends about halfway through proxy season for those companies that have already filed by the end of March. Within that list, Charter Communications' Thomas Rutledge saw the biggest jump in pay last year, more than 350%. The excess was largely due to a new options award that the company gave him. The biggest decline, Intel's CEO Bob Swan, who saw pay cut by 67% as the stock fell. Swan has since, of course, been replaced by Pat Gelsinger.
Shepard Smith here. Thanks for watching CNBC on YouTube.